This is your brain on risk. This is Mind Over Money, the podcast where Kevin Cook exposes the psychology of investing.
Welcome back to Mind Over Money. I'm Kevin Cook, your field guide and storyteller for the fascinating arena of behavioral economics. Today, I was supposed to give you part 2 of Fast Times at Innovation High, but instead, I got the chance to have a terrific guest from London who is a premier trading coach for the top banks and hedge funds in the city, the former global capital of finance, and the world. Stephen Goldstein worked as a rates and FX trader from the mid-1980s through to 2009 at major investment banks such as Credit Suisse, Commerzbank, American Express, and Standard Chartered Bank. Mr. Goldstein has coached portfolio managers in some of the world's largest hedge funds and asset management firms. He has coached traders, managers, and teams in investment banks and energy firms across the world. And he's worked with private traders from beginners in their first few years up to market veterans seeking to remain sharp and at the top of their game. Stephen is also co-host of the AlphaMind podcast, which can be found on iTunes, Spotify, and at alphamind.net. That's alpha-mind.net. The AlphaMind podcast explores and delves into the lives and stories of extraordinary guests whose experiences give us a fresh and powerful lens through which to understand the mental, emotional, psychological, and behavioral challenges people face when encountering risk and uncertainty in financial and commodity markets. Stephen's co-host is Mark Randall, and they speak to people from a range of backgrounds, including experienced and veteran traders, investment professionals, analysts, psychologists, coaches, authors, and experts in fields relating to trading, markets, financial markets, and risk. I'm on the alphamind.net website right now, and I just want to share with you some of his recent interviews. Well, he's got a brand new one this week with David Tait, who was the former head of FX trading in Goldman Sachs, and it sounds like a really incredible show because David came from a tough background and became a fearless trader for Goldman. So that's going to be an exciting one to listen to. And then last week, he did another fun one, Nick Leeson. Now, if you've been around markets for a couple of decades, you know the name Nick Leeson. He was the guy who broke Barings Bank. Barings was the largest and oldest, well, I shouldn't say largest. It was the oldest bank in the world at the time in the mid-90s, like 1995, when Nick Leeson was trading, I think, Nikkei futures in Tokyo or something, or Singapore, and he was a rogue trader. He had a bet on the market, and he hid some trades in his desk, and took down the world's oldest bank. And that is a really fun podcast. So right now, I'm going to welcome Stephen Goldstein. Stephen, welcome to Mind Over Money.
You're welcome. Glad to be with you.
Yeah. Hey, I want to start about asking you a few questions about your podcast.
Yep.
You and your co-host Mark Randall say that the podcast can help people develop an alpha mindset, and you say through these powerful, informative, and insightful conversations, you guys seek to develop, cultivate, and grow optimal mindsets for better performance and more effective and productive behavior when engaged in risk-taking activities. And I find that interesting because, you're interviewing people from the trenches and people with unique experiences. And so it's sort of the idea of, we can't have somebody else's experience, but we can learn maybe from their mistakes, and we can model some of the good things that they're doing. And so it sounds like that's sort of your goal for you and Mark.
Yeah. It's it's pretty much that. We take the view that the tangible aspects of trading are probably not that complicated or difficult. It's really the intangible aspects, and the difference between great performers and the rest of the field is they just seem to have an edge on things like behavior, mindset, attitudes, beliefs, philosophy, how they manage themselves, and all these different aspects that are part of what we call the inner game of trading. And if you address that, if you attack your inner game and you start to refine that and improve that, then your outer game should improve, and of course you then have a new edge starting to form.
Very good. Yeah. When I was growing up in the 70s, I heard about things like the inner game of tennis and the inner game of golf. And I always thought, oh, that's kind of interesting. Maybe that works for some people. And then I realized in my 20s and 30s how crucial it was for trading. Like trading, you could almost say, is totally an inner game, right?
Yeah, totally. I mean, in fact, that was the very first book I read when I decided to become a coach. My mentor threw it at me and said, well, if you're going to become a coach, you better read this. So Tim Galway was a huge influence on me, both the inner game of tennis and the inner game of golf. But so many people who trade talk about these one-to-one games like tennis and like golf, that you're really fighting two fights. You're fighting the physical opponents you're playing in the course, and then you're fighting yourself. And that is what the inner game is, winning that battle with self.
Right. So I just scrolled through your podcast. How long have you been at the podcast? Is it a couple of years now, or just? No,
it's really since we started it on a whim in about the middle of last year. We just started talking, and we talked ourselves for the first few episodes, and then we thought, people are going to get bored. If they just hear us, let's get some interesting people in.
Yeah, I'm sure my audience feels the same way. Like, Kevin, can you get some guests on once in a while? That's why I'm having you. Yeah, so it looks like you got a few dozen on there. What when you look back at what you guys have done, like which interviews jump out at you as like the most powerful or insightful interviews?
Oh, well, I don't really know where to go with that. I mean, it's, every guest has been great in their own right. The interview that has had the most hits is an interview with Merritt Black, who's a trader for SMB Capital in New York. He's the head of trading. And he really opened up at an emotional level during that podcast. And that just seemed to touch so many people.
Oh, nice.
And whenever we've gone into the emotional side of trading, the interview with Brett Steenbarger, who's the trading psychologist, that also, a lot of people reacted to that. And then we did one where myself and Mark shared our reflections on the trauma of being involved in financial markets, and that one got a lot of hits. And then we did one with a trader who had a mental breakdown on the trading floor of Lehman's. And we did that a few weeks ago. And every time we seem to go deeper and deeper into these emotional, mental sides of trading and the trauma of trading, the more people seem to react to it and connect to it.
Yeah, the emotional aspect is so fascinating because, there was a time, let's say you were looking at trading advice or books in the 90s, the message was, you must eliminate emotion from your trading. But really, that's not possible, is it?
Yeah, it's not possible. You have to work with that. And I mean, the irony is that the podcast we did today, or we published today, was with a trader who basically eliminated more or less all emotion out of trading. But that was because he had suffered a terrible traumatic experience or set of experiences as a child. And he'd reached a point where he was almost emotionless. That was how he dealt with life. He was fearless, and, everything for him, nothing could be as bad as his youth was.
Oh, okay. So that's the David Tait interview that you just published.
Yeah. I mean, he was fearless, but he was fearless because, for him, nothing could be worse. And actually, we've had quite a few. At least I've coached, and a colleague of mine has coached quite a few people who have suffered early life traumas and express similar feelings. Not that they're fearless, but the same fears that many of us have don't resonate with them in the same way. because they've had experiences where you say, well, nothing is worse in life than this. So it almost becomes, it's not that David was completely fearless, he said that, but it's that your level of fear is, I think your boundaries of fear is much wider. But, if you haven't got that, and if you're let's call it the word normal, a normal human being that has emotions, you can't turn them off. That's part of it's part of who you are. You're not a robot. And as David said, that his ability to park his emotions caused so many problems in his life. And at one point, he was only saved by the actions of the police from committing suicide.
Wow.
He had terrible trouble with his relationships, and the reason we published this podcast, because his life story is the subject of a major new British film, which gets released this week, called Sulphur and White, which tells his story, and tells the story of how destructive his relationship or his experiences in life were for his ability to form relationships with loved ones, with his wife, with his children, with his mother. That was almost the central theme of the movie.
Fascinating. All right, I can't wait to listen to that podcast, that episode with David Tait. We're going to shift gears here, and I want to talk about your actual consulting work. Your podcast is a treasure trove to begin with. There's so many good episodes in here. And to lighten things up a little bit after some of that heavier discussion, what cracked me up in the Nick Leeson interview was, for people who don't know, I'll recap again. So Nick Leeson does this rogue trading and takes down the world's oldest bank, Barings Bank, and it was a few $billion, but he ends up in a prison in Singapore, and he's telling the story on your podcast that in the prison, everybody thought he was this mastermind criminal that had stolen $2 billion. And Nick Leeson basically says, I wasn't about to let them, dissuade them from that belief, because as long as they thought that I was this mastermind criminal who stole $2 billion, maybe he had a certain level of protection in the prison.
Yeah, that was great, that bit.
Yeah, so that's a good one. So you have a consulting firm where you get, you roll up your sleeves and you get down to business with traders. And I know you do this with individuals. You do it for banks and hedge funds. And your outfit is called Alpha R Cubed, and you describe it. You and Mr. Randall work with people, businesses, and leaders in financial markets to help them and their people improve their alpha generation by developing the key human aspects of financial market performance.
Yep.
So I want to ask you questions. So we'll talk about the different work you do. When you you approach all kinds of different clients and maybe their bosses and managers of the trading desks, when you want to offer your services, how do you explain why trading is so different and so difficult versus other professions?
Okay, so there's a couple of questions in there. So normally I'm approached by people rather than approaching them. Part of the difficulty with approaching people is you have to go around and say, basically, you're flawed. And people are receptive to that.
Uh-huh.
So we do it through, we get most of our word through word of mouth. People hear about us either through someone else or through our marketing. And they come to us and they say, look, we believe there's room for improvement. Either an individual says, I believe I've got room for improvement, or a manager says, people in my team or the business has room for improvement, and could you work with us to help us do that? Trying to get people to actually admit that is very difficult, because this job requires a certain amount of confidence, a certain amount of self-belief, and a certain amount of ego protection. The very same things which actually get in the way of us performing also often gets in the way of us seeing our flaws. So a lot of people, when you do actually, and I've had this with some of the funds that I've worked with, where they've asked me to come in and give talks to some of their PMs, and there's an instant rejection of the message or the idea that they need coaching,
Right.
because it's almost like an affront to them. Now I can resonate with that, because I was coached myself when I was a trader at a bank, and I was offered it by my manager. They were trying it as a trial, and if they looked across the trading room, there must have been in this particular trading room about probably more than 100 traders. And they looked around and they thought, Steve, of all the guys, is probably going to be the most receptive to this, because I was always interested in the psychology of markets and human behavior. And my instant reaction was like, whoa, what's wrong with me?
Right.
So I rejected that at first, and it's a difficult message to get through to people. It's, a lot of them are very, you're very protective about your ego, and you kind of reject and you push that away. There was another side to this question. What was the second part of it about?
I like the way you approach this, because you made it clear that you, especially in a big bank, and for my listeners who don't know, they call London the city because this area was basically the global headquarters for finance, for a century, and so it has this reputation, and all the stories of the banks and traders and stuff. And when you work in a place like that, I can see how you to even work there, you have to have a certain level of confidence, a certain level of fearlessness, and that's tied up in your ego. So of course you're going to be the last person to admit, oh, I need training, or I have flaws, when I'm a master of the markets. I don't need any help. So yeah. I can see how that's an obstacle. And then, so if you've got a PM or a manager of a trading group who comes to you and he realizes, hey, I want more alpha, Stephen, how can you help me and my traders?
Yeah.
Then how do you get through to those traders that might have a closed mind or a big ego in the way?
Yeah. How do you get through to that? It's probably ironic, but most of the individuals, like I say, they kind of, they're open to it. And trying to break through people who just aren't open to it and not ready for it is incredibly difficult. Where I've won work is where I've worked with a couple of individuals in the firm first, and then other people have come through and said, actually, I want some of that, because they start to realize it's not quite what they think it is. So other people go, okay, so they ask questions and then say, oh, yeah, I think I'll try that. It's not, there's almost a belief that I'm coming in there like a sports coach and I'm going to be telling them what to do, which isn't how I work at all. It's quite the other way around. It's a very reflective process. It sounds strange, but I don't give any advice. We're called non-directive coaches. So the idea is you're not directing someone, you're provoking them to reflect, and you're taking them through a rolling conversation using certain skills and certain models and methods I have as a coach, which get them to suddenly open up and realize and sort of almost see their world through a new perspective and a new angle. And that is incredibly illuminating. But it's not me turning around going, you're just screwed up. You're never going to make money if you carry on like this. That is not how it works. But I think that's the image people have of coaching a lot of the time.
I see. Yeah, so it's not like you have all their trading records and a blotter of all their mistakes, and then you're going, what did you do here? You're just letting them tell you what's on their mind.
Yeah. I don't have any answers. I mean, if I do have answers, they're my answers, not their answers. And I've made this mistake in the early days of thinking I had the answer for them. Mm-hmm. And that's not how it is. I always say I don't come with answers, I come with questions. Okay. Lots and lots of questions. And the idea is to provoke thought, thinking, reflection, and to get them to see themselves where I'm the mirror. I'm holding up a mirror to them.
Tell me about, did you ever deal with a trader who had just been through some tremendous losses, and maybe this had been sort of a repeat pattern for them? So you really realized, or they realized, that they had better do some major rehabilitation in their mindset, or they were going to lose their job or make a lot more money go away.
Yeah. I mean, I have. I mean, it's ironic, but I probably work with more people who are actually on the growth curve.
Okay.
It's quite rare for people to come to me when they're sliding down the growth curve. It's not people. When I work with firms, they will normally give people that they see as having further potential, or have already. In the worst case, it might be somebody who's been on a really good run for many years and they've just hit the buffers. That might be the only time I really work with people going through that sort of cycle. I mean, only once do I remember a manager coming to me and saying, "I got a guy here. He's really in trouble. He's really." He's almost out the door. Can I work with him? That was many years ago. But normally it's people with potential who want to grow it, who want to improve it.
Right, and those are, since the job of trading is so difficult and such a mental game, it is possible for people to have fairly decent performance, but with some training and some personal growth, they could become much more effective and consistent.
Yeah, I think everyone has that potential in them. Mm-hmm. Giving you a good example of some of the things we've talked about. A few years ago, I was asked to work with a large US investment bank in their Hong Kong office. And their Hong Kong office at the time, this was 2012, had about 500 traders. And they told me they were really keen to roll this out across the trading floor. So I'm thinking, I'm kind of clocking up in my head, how much am I going to charge times 500? And what really happened was they put this offer of coaching to the entire floor, and 8 people responded. That gives you an example of how few people are willing to take it at the time. And one of the guys who responded was the person that they considered the most successful or the most profitable trader in this investment bank globally, not just in Hong Kong. So they probably had, I'm guessing, maybe 2,000-3,000 traders globally. And this particular guy wanted coaching. And when I asked them why he wanted coaching out of everyone, they said he just wants to get better. That should be the attitude of everyone. How can I make myself better?
Right, and being open to the possibility. Yeah, I can learn more. I don't know everything.
It's almost like this. Trading is almost inversion of sports. The higher up you go in the world of sport, the more coaching you have, and the more you ask for. And if you look at tennis, the closer you get to the top, the better coaches you work with, the more coaches you work with. And they work on every aspect of your game, both, the physical game and the mental game. It's a constant process.
Yeah, that makes a lot of sense. Yeah, because your top performers in all kinds of sports, tennis, basketball, whatever, those performers, they want that one person who's going to be really honest with them about, their improvement, and that sort of, that incremental improvement where maybe just getting 1 or 2% better could make the difference for a pro.
Yeah, that's how I think it is. I think, it is tiny micro differences. I don't know if you're familiar with the story of Team Sky, the cycling team.
Oh, yeah. I just found the book from their 2012 season, and I'd heard that story about Brailsford. Is it?
Yeah.
And that's just an amazing story.
Yeah, just made tiny micro differences on every single thing they did, which started adding up to big differences in the out there in performance.
Yeah, when I first heard the story, I thought, it seemed counterintuitive to me, because I thought, well, that's my problem, is I focus on too many things, so aren't you just supposed to focus on one thing and have a big goal? But to Brailford and the Sky team, it was more like just getting a little bit better every day and keeping your focus would add up in terms of compounding over 6 months or a year.
Yeah.
And then they went on to, I remember when I heard the story the first time, it was like in the year 2000, cycling manufacturers did not want the British team to buy their bikes because they were so bad. We don't want you riding our bikes.
Yeah, no one wanted to be associated with British cycling.
And
it was one of the jokes of the cycling world.
And then 5 years later, they just started winning medals left and right.
Yeah. Yeah.
With the if you're not familiar with this, there's one good book out there called Atomic Habits by a man named James Clear, who he studied the Sky team, and then he focuses on that 1%, just getting a little bit better every day. So when I asked about problem traders or traders who've blown up, that's sort of been my focus. Like when I was studying this in the 90s, and I studied people like Nick Leeson, how does a Nick Leeson happen? How does he get away with it? What's going on in his mind? And I saw that there wasn't that much difference between the rogue trader and what anybody could do to their own money. Like, that you or I aren't going to go and trade somebody else's money and deceive them. But if we have some of that negative psychology going on, where we're trying to satisfy our ego, or we're trying to look like the big trader, or we're really bad with probability and math, then we're going to make mistakes that diminish our own trading accounts, just like the guy who breaks the bank.
Oh yeah, I mean, I think everyone's got the potential within them for that to happen.
Yeah.
I think in Leeson's case, unfortunately, he had no checks and balances happening around him. So I think the system completely failed him.
Yeah.
Everyone needs a system behind them.
Yeah.
In some way, because everyone's vulnerable.
Yeah, that's a good point. It's not like you need a police officer for the firm. You don't need the compliance officer standing over your shoulder to make sure you do the right thing. It's more about just being accountable to your teammates. Nobody wants to destroy the trading operation, and so if you feel that everybody's watching each other's back, so to speak, you're not going to get into this dark corner where you're hiding trades.
Yeah, no, I mean, absolutely. And we when I worked as a trader in the 90s and Leeson happened, I did remember thinking at the time, there for the grace of God,
Right.
All right. I mean, we had the checks and balances about a week before that blow up happened. We were actually asked by one of our brokers, have you heard about anything going on with bearings operations in the Far East? And I think the losses then were about a fifth of what they ended up being. So it was out there. People knew it was happening, but the firm did nothing, and they allowed it to happen.
Yeah, and so in 2008, I wrote an article about this, and I talked about the market wizards that I learned from Jack Schwager's books, and then guys I learned from on the trading floor in Chicago and the CME, and then I talked about the rogues too, and this was 2008. We had just had Soc Gen blow up with Jerome Curviel. Remember him? Yep. He lost about $5 billion for, and the losses keep getting bigger, right? And so that was a $5 billion hit for Soc Gen in France. And I said, everybody goes, how does this keep happening? And I tried to explain, well, this is how it happens. This is how a trader, gets in over their head and then starts making bad decision after bad decision. And I said, you know what? It's going to keep happening, because no matter, you can have the tightest controls in the world and somebody will still figure out a way, to to hide trades or take excessive risk. Maybe it's less possible now. Maybe banks are much better at preventing that thing. But then 6 months after I wrote that article, we learned of Bernie Madoff and what Bernie Madoff did. And that was a classic example of somebody with, many psychological problems, taking other people's money and promising them one thing and not being able to admit that he wasn't the hero fund manager. And, it all came crashing down during the 2008 crisis.
Well, from where I stand, Bernie Madoff looked like an outright fraud, complete criminal enterprise. Whereas some of the other ones like Leeson and Cavell, it almost like they tried to cover up what was happening, a loss, sort of ego. There was an ego element to it. They couldn't admit failure, and the system allowed them to hide it somewhere, hoping it would come around and turn around. But it didn't seem like there was what you would call a criminal intent to defraud people. Whereas Madoff sounds, at least from my understanding of it, that it was a complete and outright fraud.
Yeah. So, and the difference being that the two bank traders, Leeson and Curviel, were, it wasn't their even if the trades worked out, it wasn't money they were going to put in their own pocket. So they weren't really in a position of stealing. And I remember Curviel saying, it was a culture of risk taking. That's what we did, and so that kind of feeds it too. But my thing with Madoff, why I think it also became an ego thing for him, is because he developed the Ponzi scheme over time. So let's say 5 or 10 years go by where he's taking in new money because people think he's a brilliant hedge fund manager, and he can't admit that he's not. So he's just using that money he's recycling it, and he can never stop himself. So he obviously he enriched himself and his family, but it came to a point where he couldn't reveal the truth anymore because it was so big and so massive, and so many times he had taken people's money under the assumption that he was great. So there was a bit of an ego thing there, in my opinion.
So that was there as well. Okay.
Yeah.
Okay.
So when you look at the mindset of a successful, sustainable speculator, and it's obviously having a positive impact on their performance, does that spill over into other areas of a trader's life? Meaning if they're approaching trading with a healthy mindset, does that also it's not just a trading thing, I guess, is what I'm getting at, right? It's if you've got the right mindset for trading, and healthy ego and discipline and some sense of peace, that also is probably working well in other parts of your life.
Yeah. It's a big generalization, but I'd like to think so, but if we talk about the example I gave with Dave Tait earlier on, it's very extreme. What he was doing with his mindset in terms of trading was trading fearlessly, and obviously it's an extreme. But other parts of his life were shot to pieces because of that same approach. And you might say the opposite happens. You go in with your life can be very well ordered in other parts, but your trading could be a mess. I'm not sure if I'm answering your question. I do think if you go into anything with a positive mindset, obviously it helps. But it's quite difficult because trading is such a skill and an art. It's almost like saying, well, I'm going to go in with a positive mindset and I'll be all right, and that'll help me succeed, and that won't. Yeah. And I see a lot of people make that mistake in that they practice being positive in their mindset, but you can't will yourself to win just by being positive. It is helpful and it is useful. I'm a big believer in positive psychology, but it depends how you're going to do it. Am I going to approach this correctly? In other words, you have to do everything else that's part of it. I say for a lot of traders, if you're new to trading, a positive mindset is really being realistic about your chances of succeeding. A lot of people come to trading and they say, oh, I'm a clever guy, I'm a smart guy, I'm going to sit down, I'm going to learn a system and I'm going to make money. No, you're not. It's going to take years to learn how to trade. It's a skill, it's a profession, it's an art. You're walking in there on day one and you're competing with the Paul Tudor Joneses and the Ray Dalio. You're up against them, and Jim Simons, they're facing you out there every single day. They could be the other side of your trade. You're not going to beat them. You have to take time to learn, and you have to be realistic, and you have to say, I'm going to read the books, I'm going to get mentoring, I'm going to put money aside because, I'm probably not going to earn a lot of money from this for years. I'm going to trade small sizes so I can learn what I'm doing before I start competing with these guys. And a lot of people's mistake is they go out there just thinking, all you need is positive psychology and a few lessons and you're going to be able to do it. So it can delude people. That's almost what I'm saying.
I see, yeah. And maybe I didn't ask my question very well. I'll tell you kind of where I'm going. I'm actually writing a book on aspects of trading psychology, and I very much link my thought process and training process to some ideas about traders being able to look at the market and not get too excited or upset one way or the other, and to have a real emotional keel working for them. So things that would bring this to mind would be something like, life is 10% what happens to you and 90% how you react to it, how you respond. And because that's what trips people up. I talk to a lot of individual investors and individual traders in my work here at Zacks, and the same themes come up over and over again. They have regret about missing a trade. I missed that trade, and they get upset when things don't go their way. And I'm like, that's what's causing you to miss the next trade, is all that inner turmoil about, should I be in this, or should I sell that, should I buy this, what should I do, and all that wishing and hoping and grasping is what's making them miss all the opportunities right before them, and then just letting probability work in their favor. Taking small losses, letting big winners run without being emotional about it. So I don't know if you know who Tom Basso was. He was featured in the Market Wizards, and he had a sort of an extreme take on this. He said, when done properly, trading should be about as exciting as breathing. And so this is a very Zen approach to trading, that you're not letting your emotions run away with you, because that's what's causing you to make the next mistake on, I'm moving my stop loss, or I'm chasing, right? We talk, like, FOMO has become part of the vernacular of even the average investor says, I know what FOMO is. That's fear of missing out. But people don't even realize, just because now you know the acronym FOMO and you could describe somebody else doing it, you don't even realize how often you might be doing it.
Yeah, I get where you're going now with this. Yeah, I mean, allowing the market to put you on tilt is how I would always describe it.
Oh, very good, very good. I like that. Yep, letting the market put you on tilt.
Yeah, and that's what messes with so many people's head. And that often comes because people don't have a proper understanding of what the market is, or even what trading is. And that's people who have been doing it many years as well. They start with one set of beliefs, and then they keep those beliefs all the way through. And I was as guilty as that as an ex-person for many, many years. And in fact, I would say that I kind of had a reinvention of myself after my own experience being coached. And, part of that was the reflection that the coaching catalyzed for me. So it wasn't necessarily what I got directly from the coaching, but what I got indirectly was that ability to then reflect and see, and that process started to happen for me. I started to look at how I executed in the market, what my philosophy was to risk, how I looked at losses, and I started to almost compartmentalize losses. So for me, losses had to become something which bizarrely I had to start accepting. And I coined a phrase, learn to love your losses, because without them, you're not going to make money.
Wow.
And
Well,
suddenly, yeah.
That was one of the first things a pro trader taught me back in the 90s. He said the exact same phrase you did. You have to learn to love your losses. And I thought, that's the weirdest thing. Why did you say that? Yeah. And he goes, you'll see.
Yeah. And suddenly they're not threatening. In fact, suddenly you start realizing that if I don't have losses, I'm not going to make money. So right. they, in a sense, they become your capital. And then suddenly they become much easier. They have a place in your process. So if you can sit there and say, look, my methods, so when I was trading, I probably had about a 20% success rate, but I had a risk reward on trade, say, of 5-1 or 6-1. And you were always looking for those big risk reward trades. And that meant that you were suddenly comfortable being wrong or losing 80% of the time because it fitted your model and method. As long as you had the balance and your process and your method could find those winning trades. And sometimes you had to suffer a lot of losses in a row and not being able to put on tilt. So having that mindset, saying, that is part of it. You may get 15 losses in a row, and that helps deal with things like, recency bias. It's about, but I didn't have that till much later in my life. Before then, losses were, oh, this is catastrophic. How am I going to deal with this? And they'd send you into a hole. And it's not that I didn't have that still a little bit later on, but I was able to recover much quicker from those setbacks.
Very good.
In fact, I have another model. You're from psychology, a psychology background. So the philosophy that underlies my work is Gestalt psychology. So are you familiar with Gestalt?
Oh yeah, Fritz Perls.
Yeah. Fritz Perls, yes. So within the philosophy we use, we have a model called the cycle of experience. Again, I don't know if you're familiar with that. And it describes the experiences we go through in everything we do within life. From small cycle, everything is a cycle, whether it's a small level or a big level, and it follows this same pattern, this cycle of experience. And you have to go around the whole cycle to grow. Now, the final part of the cycle is letting go. It's leaving something behind. It's divorcing something, an idea or a belief or a trade. And when you can't let go, when you don't let go, you stay with it. And that's when you go on to tilt. And one of the things I've noticed with all the great traders is their ability to let go, reset, start again.
Very cool. I like that because that's leading into one of my next questions here for traders who even are getting to that point. Do they come to you for periodic retraining or periodic, a sort of checkup?
Yeah, well, actually, the people that hire me privately, many of them do, usually within organizations. And that's not true, actually. There's some organizations, hedge funds, where the people have said, can I keep seeing Steve periodically? On a less, it almost moves into a mentoring relationship. So the coaching has a specific goal, which is usually spread over 8 to 10 months, when we meet roughly once a month. And it follows a particular path or a journey. And then the idea is at the end of it, they go on their own journey. But for many of them, we maintain a mentoring relationship where we maybe meet 3 or 4 times a year. And they find it really useful because it gives them a chance to go back to some of the basics that we discussed within our coaching. And often they find that they get straight back into, maybe they've slipped from the new path they're taking, or it's reminded them of something. It almost holds them to account, is probably the best way of putting it.
Yeah, and the great thing about markets, what you and I probably both love about markets, is that they're never boring. Well, sometimes they're boring. You get into a low volatility period, and every day looks like, oh, we're up another, a 0.25% today, and that can get a little boring. But as soon as you
enough at the moment.
right, yeah, exactly, yeah. As soon as you get used to that, then whammo, you get some wild randomness, and things start to change, and that's when you may have to re-examine some beliefs or methods, or just get back to your foundation. The last thing I want to mention, I wanted to pull up your Twitter feed, because what I love about you is that your Twitter feed, you are throwing out gems, just about every day. You've got something that I'm like, oh man, I gotta like that. That is so choice. So if you want to follow Stephen on Twitter, it's AlphaMind 101, right?
Yeah, that's the one. That's the one. I just want to go back to one thing you said before as well. You mentioned about making trading as boring as possible. It's hard. You cannot find any phrases truer than that. The great traders try and do that. If I was trading this market, I would probably be hardly trading at all. 2008 was one of my quietest years. And I often talk about one of the best day traders I coach. This guy's incredible. And he, people think as a day trader, you've got to be in the market every single day. I think this guy on average, he trades on about 40 days a year,
Wow.
And in 1 year, he told me he traded, I think it was 5 times or 7 times, on only 7 days, because he couldn't quite line up the situations that he wanted. And many traders are out there thinking they're going to trade 50, 60, 70 times a day. You got no edge when you trade that many times.
Oh, right. And the other type of emotional trading I forgot to mention was revenge trading. When you miss something or you lose, and then you want to get it back, and people dive into revenge trading a lot. I want to read a couple of your tweets here. So remember, you can follow Stephen Goldstein on Twitter at AlphaMind101, the numerals 101. He's got his pinned tweet right now is from February. I want to be a pilot. Learn for 5 years. I want to be a lawyer. Get a degree, then learn for 5 years. I want to be a boxer. Practice 4 to 5 years. I want to be an athlete. Practice for many years. I want to be a trader. Start tomorrow. And then he asks, any guesses why so many fail? And here's another good one. If you go into trading with a view that you have no idea what's going to happen next, ever, and that every choice you make is a best guess, I'd bet my bottom dollar that you will be far more likely to succeed. Unfortunately, most people don't have that attitude. Yeah, see, that's very counterintuitive. Like a new trader would go, wait a second, I want the sure thing. I want certainty. I know what's going to happen. If the Fed does this, and if the Fed cuts rates by 50 basis points, the market's going to scream higher. And those people bought the highs this morning, and now they're sitting with some losses.
Yeah, most of the great traders I work with, I consider them pretty much as uncertainty jockeys.
Right.
That's what you do. You're riding waves of uncertainty, and no one knows what's going to happen next. And the moment you think you do, that's the moment you get a big, great big slap in the face. Yeah.
All right, I'm going to wrap it up here. I want to mention the AlphaMind podcast again. You can find it on iTunes and Spotify. And you can also, he's got a dedicated website for it where you can also look at all the episodes, and that's at alpha-mind.net. I noticed did you interview the author of the book about Jim Simons? What was his name?
Greg Zuckerman.
Zuckerman. Okay, so on that episode, you have Greg Zuckerman on there.
That's right. Yes.
Okay. Yeah. Good. I look forward to that one too, because I love Jim Simons. I've followed him for years, and I watch all his videos on YouTube, his lectures and stuff. Jim Simons was a math professor in the 70s. He sort of stumbled into investing and basically created the modern algo movement because he was a math guy and he surrounded himself with other quants and it was one of the most successful hedge funds ever because. Jim Simons got so successful he could charge, $5 and $40 for his fees because he could just turn money away, and that's how good they were. So that'll be a good one to listen to too.
It's a brilliant. I highly recommend listening to the book on Audible. It's done really well.
Okay, good. Well, Stephen, thanks so much for joining us today on the Mind Over Money podcast. You are a veteran trader with a ton of insight, and I'm sure your clients are very happy with the exchanges that they have with you. I remember as you like to say, you're not a directive coach. How do you say? Oh, you do non-directive coaching. You're just there. You don't come with the answers. You're just there to ask questions, and it's obviously working. For the traders you work with, because they keep coming back to you.
It must be doing something right, and it's easy because I don't have to have any answers.
All right, Stephen. Thanks, and we'll talk to you soon.
Thank you, Kevin. No, it's been brilliant. Thank you very much.
All right, that was Stephen Goldstein of the AlphaMind podcast, and you can follow him on Twitter at AlphaMind101. A great storyteller. He's always posting something interesting on Twitter, and that's what keeps him fresh in my mind because he's in my feed. And there's a gem every day. But check out his podcast too at alpha-mind.net. And we will talk to you next time on the Mind Over Money podcast.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.